Hello everyone, and thank you guys for tuning back into another video. As always, if you enjoy the content, make sure to leave a like and subscribe. So what I'm going to be doing today is continuing to explain the trades that I've taken in these past week and a half, because like I said, I'm a little bit behind on videos because of school and everything, but I will do my best to try and keep you guys updated on everything that I do. And if you guys want to stay up to date on what I'm trading, you guys just go check out the Discord, because I'm usually on there every single day, just because it's a little bit easier to communicate on there than to make videos. But the trades that I'm going to be explaining today are going to be on TSLA and COST, and these trades happened last week, and I actually ended up losing quite a bit on the Tesla trade. I ended up losing $480. We actually have an iron condor opened right now, which should play out within this week, but that's not the trade that I'm going to be explaining. The trade that I'm going to explain today is on a call credit spread, which I entered, and it was a day trade. I entered it the September 5th. And what I ended up doing was I sold a 15 contracts, and I got a total premium for around I believe it was around 44 or something like that. But what we ended up doing was we ended up getting a credit of 945. So that's a pretty big credit, because I was trading very close to in the money, because it was 1 day until expiration. And so what my plan originally was to day trade it and be able to make a quick profit, because Tesla was so overextended. And the reason why I ended up losing was not because the trade was a bad idea, but because of how I executed the trade. You guys see that I ended up getting it stopped out way after, because I didn't follow my principles of cutting losses, and that's kind of why the loss was such a big loss. But I'll end up explaining a little bit more on what it is that I did wrong on this trade when I get over to the TD Ameritrade chart. But overall, the trade, like I said, wasn't a bad idea, and you guys are going to see why in a bit. But it was just the execution of the trade that was wrong on my part. But the next trade that I'm going to explain is on COST, and this trade I'm really shocked on this one, because I could have ended up making close to $7,000 on this trade. We only ended up making 70, but because I ended up closing out the position fairly fast because of how it was trading. It was trading very choppy. September 6th, it was kind of going having these really big swings towards the upside and towards the downside. And so I was afraid that if I continue to hold on into the weekend, because I was trading this on Friday, the data decay was going to take a lot out of the value of the options, because of how much it was swinging. And so I didn't want to take that risk, and so that's why I decided to close out the position and take the $70 profit, because like I said, it's always better to take profit than to get greedy and try to risk getting more. But like I said, this position, what we ended up doing is I ended up buying 305 puts, and this was on September 6th. So September 6th was over here we go back to the 1 month. September 6th was trading right around the 303 area, and so we ended up getting out on the same day, September 6th. But you can see that after September 6th, going into that following Monday, September 9th, it gapped down all the way to 299, and just throughout that week it continued to gap down even more, getting as low as 289. So definitely missing out on really big returns, especially because the option that we bought were already in the money, so they were going to move a lot in our favor had I held on a little bit longer. But like I said, always better to take profits and not get greedy. Now I'm going to go ahead and hop over to the TD Ameritrade charts and explain to you guys a little bit more. So this is the TSLA chart, and what I ended up noticing on this trade was that on September 5th, which is the day that I traded, at opening it was kind of trading flat, and then all of a sudden it started to gap up quite a bit without having any news that had come out, and so it quickly started to get quite oversold. You can see that the RSI started rising quite a bit, and the MACD also started to get way overextended. And so this, along with the volume drying up, going into the middle of the day, indicated to me that the move was coming to an end. And I also noticed that every time it kept on getting higher, it kept on trading hovering right above the EMA, and it did end up dropping below the EMA a couple of times, but for some reason it just wasn't able to break down. However, this still seemed like a good short position to me, and that's what I ended up doing. I ended up entering a call credit spread on TSLA, and basically what I ended up doing was selling the 230 calls. And what that means was that as long as Tesla stayed below $230 by the end of Friday, which is the following day, I would be able to make money. However, you can see that going into the close of the day around 1 o'clock, it had this big spike out of nowhere. You see it was trading around the 225, 226 area, and I was relatively comfortable if it kept on trading around that area. But all of a sudden, it started to trade above 226, and it got as high as up to 229.46, and that's when I decided to close my position, because in my opinion it was way too risky to continue holding with the stock being that close to the short call, this close to the expiration. And also, another reason why I ended up closing was because I had a pretty big position. So, in my opinion, it definitely wasn't worth holding on to Friday, even though I still believed that it was going to go down. But you can see that had I held, I would have actually been fine. It opened. Once it opened on Friday, it started to gap down. You see, it opened at 229.40, and upon market open, it got as low as 225.17. So overall, I had the right idea. Just the execution was not efficiently, I guess. Something I could have done better on this trade was hold off a little bit longer on the entry, and instead of playing the 230 calls, I should have gone for around 235. So even though I would have made less money on that trade, theoretically it would have been safer and less riskier than going that close in the money. But like I said, overall we did have the right idea. On Friday, it did end up closing on Friday below 230. So had we held on to that position, we would have been okay, and we would have been able to profit I think it was around 945, because that was a total premium. But there was no guaranteeing that after it broke out right here, it was going to go back down. It could not go higher, and so we could have ended up losing a lot more than $480. But that's something that I think I did good on this trade, even though I could have cut losses a little bit earlier. I decided to not let emotions get into this trade and just cut losses, because this trade could have gone a lot worse. But that's pretty much it for this trade. Now I'm going to go ahead and explain the COST trade. So this is the COST chart, and what ended up catching my attention on this chart was that over the past couple of weeks, and especially the past couple of days, COST had been gapping up continuously without having any sizable pullback. And so I had been looking at it for the past couple of days to try to figure out a short entry, but Friday morning it really caught my attention after it spiked up quite a bit. You see, it was trading around the 297, 296 the previous day, and then all of a sudden, on really no positive news or anything, it just decided to gap up quite a bit. You see, it crossed over the 300 area and got as high as 302. After that, it just kind of consolidated. It did end up going higher, as high as 304.37, and then it had a small pullback back to the 302 area. And so what I was hoping for COST to do was for it to retest the highs of 303, 304 before entering a short position. And so it did end up doing that towards the middle of the day. You see it got as high as up to 304 again. So that's when I decided to enter my short position. I entered a pretty decent size of contracts and position size on this one. I think it was around a $3,000 position. So I had around 7 contracts, I believe, and they were all the 305 puts. But you can see that throughout the rest of the day, it just kind of traded sideways, and it didn't really make a move towards the downside as I was hoping. It did cross under the EMA line a couple of times, but it just wasn't able to break down. And because it traded sideways and I was losing premium, I decided to just take the $70 profit because I didn't want to hold going into the weekends, because that's just something that I personally don't like doing, because in my opinion holding options throughout the weekends is quite risky. But if we go ahead and continue the chart to see how it would have played out, we see that Monday morning it did end up gapping up quite a bit, all the way up to 307, so we would have been down quite a bit. However, you can see that if we go down even further, that I definitely had the right idea on shorting this, because after it hit that high of 307, it started to gap down quite a bit, and this gap down got as low as 298, but it continued to gap down into the following days. You see, going into the next couple of days leading after that, it got as low as 287. So that's why I'm saying that I definitely left a lot of money on the table on this trade. And I was looking at the options change a couple of days ago, and it would have turned out to be that I could have made around $7,000 on this trade had I held the options all the way from Friday to around Wednesday of the following week. But there was no guaranteeing that that's how the trade would have played out, even though I had a really strong belief that Costco was overextended and was due for a pullback. It just because it just could have easily have kept on going higher, and instead of stopping at the 307, it could have been broken over the 310 area and continued to gap up. So I'm quite happy about the $70 win. I'm not complaining, but if I would have known, because obviously hindsight it's easier to tell what you should have done, but overall, like I said, pretty easy trade, because like I said, it was just pretty easy to know that there was going to be a pullback, considering it had been gapping up all these days. But that's pretty much it for this video. I hope you guys enjoyed, and I will see you guys in the next video.